Okay, so we have to cover one of the most calamitous events that is about to take place. And then also I want to go ahead and cover what's going on with Tesla stock, because at the end of the day, guys, what a lot of people tend to forget is that everything is interconnected, right? So I want to go ahead and talk about what's going on in the economy. And guys, this is honestly pretty scary stuff, right? So I want to go ahead and highlight this tweet by Elon Musk. Now, in this tweet, we have Elon Musk responding to a media outlet saying this is by far the most serious looming issue, mortgages too. So obviously I was, pretty curious, and I was like, okay, well, I have to, look a little deeper into this to get a better understanding. Now, if we take a further look into the full extension, or, we really highlight the full details of this tweet, we're going to see something pretty interesting. So it says, over the next 5 years, more than 2.5 trillion dollars in commercial real estate debt will mature. This is by far more than any 5-year period in history. Meanwhile, rates have more than doubled and commercial real estate is only 60 through 70% occupied. Refinancing these loans is going to be incredibly expensive and likely lend to the next major crisis. The worst part, 70% of commercial real estate loans are owned by small banks. Rapidly rising rates are teaching everyone a valuable lesson. There's no such thing as free money. Now, I gotta be honest with you guys. When I first read this, I honestly didn't understand the whole nature of why this is so bad. I understood that this was definitely something bad and something to be concerned about. But look, guys, I'm gonna be honest. I have a background in banking, right? I just got licensed to, do real estate, just residential real estate. And also I have a background with just stocks, right? Obviously, I worked for, I'm not gonna say which bank, but it was a large financial institution. And so I had to call up a good friend of mine, Orlando Miner, who is also on YouTube, who has an extensive background in commercial real estate, for him to break this down for me. So I'm gonna go ahead and just kind of make it as much as simplified as I can, so that you guys could understand why this is seriously bad news for the overall economy. See, unlike residential real estate, commercial real estate typically has loan terms that are 5 years or less, with 20 to 25 years amortization, right? So why does this matter? Well, here's the thing, guys. See, there's been a staggering amount of vacancies in commercial real estate, and here's the thing. Commercial real estate is assessed by its cash flow. Now, if there's a lot of vacancies, right, that means that there's less cash flow. Think about like a strip mall, right? If there's, a Walmart and, a whole bunch of other businesses, right? And let's say like 5 out of 10 of those businesses are gone, well, that's less cash flow. So now this commercial property is valued less, but at the same time, rates are going up, and the term for this loan is coming up where, hey, they have to refinance these loans, and these properties are worth less, but they're more expensive due to these rates. So why does this obviously matter? So what we have is a bunch of commercial real estate that's basically underwater, where these, unless you're a big institution like BlackRock who could afford to, fork the losses, you're gonna have to pay more than what the property is worth. So what's gonna happen? Well, they're just gonna give the property away, right? Because there's no recourse on these loans, right? And so basically, a lot of the small banks are gonna have to take a huge L, right? And so what this is going to cause is a big credit crunch. So we know that a lot of Americans are relying on credit. A lot of businesses are relying on credit. Well, if there's a huge credit crunch, well, all these businesses that have like these large lines of credit to make payroll, well, they won't have that option anymore. And guess what? That means that they won't be able to pay their employees. And obviously this trickles down to just a major crisis. And I know you're like, hey, Justin, why are you going so deep into something? And when we're just trying to understand what's going on with Tesla, hey guys, you have to understand everything is interconnected. Now, I also want to just point something out. So we recently just had the consumer confidence come up, and we're seeing that consumer confidence is slightly ticking up. Now, you guys know, if you're subscribed to the channel, that I'm not really a big fan of really paying attention to what consumer confidence is, right? And the main reason is because if you actually look into the fine print of where this data comes from, it's really just a survey of 600 Americans, just asking them how do they think the economy is going to perform. Now, you guys got to understand, 600 Americans is not a good representation of what's going on in the overall economy. And also, most people don't look past further than what's happening on front of their nose, right? People are oblivious. Either they know what's happening or they don't know what's happening, right? Now, why are they very optimistic of what's happening in the overall economy? Well, guess what? We're seeing jobs actually increase, right? Which is good, but also bad. See, obviously this is good because we want to have people having jobs, but this is bad because this is contributing to core inflation, right? And core inflation contributes about 57% of the actual inflation numbers, right? And so if we just have a bunch of people employed and a bunch of people spending, well, this is going to trigger the Fed to have to hike rates even higher, right? Or have them hiked for a longer amount and not cut, until a later date. And so guess what? This is going to be just honestly terrible for businesses. Why? Because obviously it's going to be much more harder to borrow. And then on top of the crisis I mentioned earlier, well, it's just like I said earlier, a calamitous event. Now here's the thing, guys. I don't have a crystal ball. I can't tell you exactly when this is all going to come down. It's like I can't tell you the exact date when the domino pieces fall. However, we have to, be mindful of what's going on. Now, I want you guys to take a look at Tesla stock. Now, although I'm very bullish for Tesla stock in the long term, if you guys have been watching my videos in the short term, I've been slightly bearish on Tesla. And I mentioned this, the reasons why, multiple times. I've even got people saying, hey, Justin, you're saying the same thing. Now, the reason why I say the same thing sometimes when it comes to what's recently happening with Tesla is because the data hasn't changed. Unless the data changes, then I'll have something different to say. But if we take a look into the price action, we're seeing that Tesla is at this level where there's a lot of volume by price. And so we're having this area where there's resistance and it's difficult to break above this. Now, if we have bad news, well, we could see Tesla come down, and that's going to be obviously bad for Tesla. Now, if we have good news, well, guess what? We could have Tesla go up. Now, what would be good news for Tesla? Well, one of the, events that could possibly happen in the near future is earnings for Tesla. Now, we don't know when the earning date is going to be. It's around, the ideas are really around April 20th to April 25th. Now, in Elon Musk fashion, I'm just gonna go out there and say that it's probably gonna be April 20th. Why? 420, right? And we know Elon has a good sense of humor, which, by the way, I know a lot of people don't like that about him. People think like, oh, well, we can't be someone that's running a company at such a high level and then be a clown at the same time. Look, guys, humans are much more dynamic than we tend to give ourselves credit, right? Everyone kind of believes that you have to be someone that's on the far, let's say the far right, or you have to be on the far left, and you can't be someone that's in the middle. I think it's very admirable that, Elon Musk, is someone who operates at a high level, but obviously has time to put out memes like this, like talking about King Kong's ding-along, like he did over here on Twitter, right? But at the end of the day, bringing things back and, getting off from a different tangent, I want to go ahead and highlight a few things. So there's this article that just came out that mentioned that because of the production happening at Tesla, we could see one of the most profitable quarters for Tesla. Now, this is really good, and this could be, the catalyst event that pushes Tesla up. So that's why we really want to be mindful of, 420 when that date comes. Now, again, it could be a different date, but I'm predicting it's probably going to be 420, knowing Elon, in Elon Musk fashion, right? Now, real quick, right before I move forward and cover one more thing about Tesla stock, I do want to just make a friendly reminder that if you're not subscribed to the channel, make sure to hit that beautiful subscribe button right over here if you find any value, so you guys could continue watching my videos. And if you are already subscribed to the channel, salute. But anyways, getting that out the way, I just want to continue and just talk about Tesla. So, on the short term, I'm bearish, right? There's no good news coming out. If we look at things from a technical aspect, things are looking pretty bearish. The only thing that could possibly provide good news would be a catalyst event such as earnings that could push Tesla stock up, right? But of course, with the looming concern of a banking crisis, along with everything else going on, right now I'm very bearish. Now, I know this confuses a lot of people that may be new to the channel or watch the channel. How can you be bearish and bullish at the same time? What are you flip-flopping? Well, here's the thing, guys. Look, long term, I'm bullish. Just the other day, I added more shares into my, long-term portfolio. When Kathy Wood was selling, I bought more Tesla for my long-term portfolio. Why? Because Tesla has something called pricing power, meaning that they have this vertical integration where basically while all the other car manufacturing companies are struggling, saying that they're going to become profitable in 2026, Tesla's already profitable. They're just scaling up and trying to become more profitable, so they're ahead of the lead. This is why I'm buying more Tesla. But in the short term, in my trading account, investing and trading, two separate things, by the way, in my trading account, I'm just, shorting Tesla. Yeah, I'm just hedging my long-term account, and whenever Tesla's going down, I just short. But that's pretty much my perspective on Tesla. Let me know what you guys think in the comment section below. What are your ideas or thoughts on Tesla, both in the short term or maybe in the long term? And with that being said, guys, before you go, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.